Okay, so today we are going to talk about the 1040 Easy Tax Form. So this is when you got your W-4 and you're ready to file your taxes, ready to go. Okay, so the Easy Tax Form is for individuals who do not have a lot of allowances or they're not claiming a lot on their tax form. And this is where you're going to use your W-2 from your employer that you got at the end of January. And your W-2 is going to have most of the information that you need. Now, I will tell you, I used the 1040 Easy Tax Form until this past year when I got married. So, until you get married or have kids or anything like that, you can totally do this. It's free. Save you some money, okay? All right, so I'm going to show you an example. We'll do one together, and then you'll do two on your own, and then the sub will go over the answers with you, okay? So, go ahead, pause the video. Pass out your information sheet, pass out the paper that has the 1040 Easy in the page protector, pass out the markers in the blue basket in the front table with the paper towels. Okay, so I have our information sheet up here. I'm going to show you Carly's and then we will do Lance's together. So we have Carly's information, her name, address, and then also some other information listed that you're going to need to know. So if you hear me talking about something and you're not sure what I'm talking about, refer back to this sheet because it's more than likely on here. Okay. So most of you know your name, I would hope, and you're going to go ahead and put your social security number on there. Coming on down, you put in your address. And the only other thing that you would need to look at is over here to the right is the presidential election campaign. Now, this takes $3 off of your refund if you get one to go towards that campaign. It's optional. You don't have to do it. I've never done it. You're not going to get in trouble if you don't do it. But some people like to. So, whatever floats your boat. So, she said she does want $3. She wants $3 to go to the campaign. All right. Now, on the information, it says that she has earned $15,900. So, we write her income right here on line 1. And that will be on your W-2 form that you get back. Moving on down, taxable interest. Taxable interest means that, let's say you have a checking account and each month you get, basically the bank will pay you for having money in their account. I think this year I got like $5 taxable interest, but they still want you to write it down. So that's where you would write that. Sometimes if you have a savings account, you might have interest that you earn off of debt. So any type of taxable interest, if you earn interest anywhere, that's where it's gonna go. That's part of your income. If you're unemployed, so let's say you're working near the year and then they have layoffs and you receive an unemployment check, that's where you would write that down. Now on line 4, you're gonna add everything up and that is your adjusted gross income. Okay, moving down here, this is called a standard deduction. So on here it says if someone can claim you as a dependent, check that. If someone can claim you, check the boxes and enter the amount from the worksheet on the back. If no one can claim you, enter $10,150 if you're single and $20,300 if you're married filing jointly. So it says on the information sheet that she is single and claims herself. No one else can claim her. So she's going to enter the standard deduction. Basically what this does is it takes how much you make and it deducts some of that income so that you don't have to pay so much each year on the income that you have. Because what they're going to do is this amount is how much they're going to tax you. They're going to look this up in a table and they're going to say, okay, well, Carly, we're only going to tax her on $5,750 instead of $15,900. So basically, you're not paying as much tax. Look at it. Okay, going on down. This is where you write your federal income tax. That'll be on your W-2 form. And then earned income credit. If that applies to you, you would know it, but most people it's not going to apply to. I have a friend who's an accountant, and she explained to me what that was, and more than likely that's the majority of you that's not going to apply. So, coming on down, we add those up, and those are her tax. Now, it says use the amount on line 6 above in your tax table in the instructions. So, where did I get this number? In the personal finance books on page 158, there is a tax table. And what I did is I went in that table and I found this amount. Now, you will see that it's kind of listed twice because they do it in ranges, like from $5,000 to $5,750, or from $5,750 to $6,000. They are going to want to take the most money from you, so you're going to have to, if you fall in that type of category, you got to go up a category, okay? They're not going to say, oh, well, they're at the end of this category, so we're not going to tax them as much. No, you got to take the bigger tax, okay? So coming on down. Now, a lot of you, healthcare is a big thing now where it's required. Everybody's required to have health insurance. Well, if you don't have health insurance, this is where this comes into play. I have a guy that I used to work with, and he refused to get health insurance, even though our boss offered it to us. So every year, instead of, like, this is how much tax that Carly is required to pay. If she didn't have insurance, this is where her fee is going to come in. She's going to be penalized for not having health insurance, meaning that how much tax she has to pay in is going to go up. So sometimes it's better for you to go ahead and, get the cheap insurance, health care, whatever, so that you don't have to pay this big fee at the end of the year, okay? So, coming on down, it says that if line 9, which is right here, is larger than line 12, which it is, subtract those two and you get a refund. So, yay, Carly gets a refund. So she's going to get back $1,532. And then if you didn't get a refund, it will go down here. And so the last thing you would do is sign and date and put the number and everything like that. So let's go ahead and we'll do Lance's together. So go ahead and grab your pens and everything like that, and fill in that information there. I'll give you a few minutes to do that. So we have Charles Lance Warfield, and then you'll write his social over there. If you were to file with a spouse, you can put their stuff in there, but he is not. So we put his address and then where he lives. And in the box it says that it didn't say anything about a presidential election campaign, so we're leaving that blank. If it's not in there, the best thing that you can do is just leave it blank. Okay, let's move on down. So the first one, we are going to write his income. So that year he made $14,233. However, on our information sheet, it shows that he has 150 interest on savings. So that's where that comes in, because he earned that interest. The bank gave him that money for having money in their bank. So that's part of his income. So we put how much he made at work, how much he earned for having stuff at the bank, and then he was not unemployed, and then we added those together. So that's his adjusted gross income. Okay, move on down. So here's where we do our standard deduction again. Remember, this is taking money off of how much you actually made, so you're not taxed on so much. So it says on the information sheet that he is single and claims himself. So we're going to do it like we just did at Carly's. We're going to check you, and then we're claiming that standard deduction. We're going to subtract those two. So he's only going to get taxed on $4,233. Okay, here's how much federal income tax he is paid in, which is on your information sheet right here. So we just fill that information in, and that will be on your W-2 form. He does not have any earned income credit. So we just add all of that together. We just bring that number down. Now, what you're going to do is you're going to look on page 158 in the personal finance books, and you're going to find you're going to find 4,233 in that table. And then follow it across to the single column, to the single rate, and it should be 423 is how much he should have to pay in for taxes. That's how much he's responsible for. Okay, so he did have health insurance, so no fee. So he only owes $423 in taxes. So, like on Carly's, if line 9, which is this one right here, is bigger than line 12, you're going to subtract it, and that's his refund. Now, before you go on to Karen and Caitlin's, I will tell you, Caitlin's is going to be different. It's not going to be like these two. So take your time with that one. If you need to work with somebody, that's fine. I do want to point out that on hers, she has a salary and she has tips. So you're going to have to, in line 1, you're going to have to add this and this and write those both together in line 1, okay? Because that is all part of her salary. Because if you look up there on line 1, it says wages, salaries, and tips, okay? And so she has a salary and tips. So you've got to add those two together and write that amount in line 1. Also, be aware that she does have earned interest, okay? And then Karen's is about the same as Carly's and Lance's. So take you about 10 minutes or so, work through these, and then the substitute teacher will show you the answers.